Welcome to Pen and Paper Research. My name is Harsh Dubey. I'm a SEBI registered research analyst and I'm also a BSc member. My registration details you can see on the screen. So in this video we are going to discuss about the Nifty direction in the upcoming week and some global economic scenarios. So this report I have prepared on 10th of January. So before we discuss further, please go through the mandatory disclosures that are there on the screen. So let's move forward. So first of all, we are going to discuss on the global macroeconomic trends. We see that globally inflation is subdued now and inflation is under control. So inflation is no more um, cause of concern globally. So it has softened across the globe. So the main concern which is there in front of the world is the consumer sentiment which has dipped and the demand remains a major concern. So let us go through the specific developments in United States. So the first concern is the employment conditions. So basically the US is seeing unemployment rise every month. Month on month, there has been increase of unemployment rate, and currently that employment rate stands at 4.6 percentage points. So consumer sentiment is also dipped in the United States. So the delinquency rates of consumer loans and credit card loans has increased tremendously, and that shows weakness in the consumer sentiment in the United States specifically. Interest rate environment, talking about the interest rates. So Federal Reserve is being consistent on the rate cuts, and in the previous videos we have also discussed that Federal Reserve is going to do a rate cuts of 25 basis points, which we were estimating in the month of November in the previous videos, and Federal Reserve has cut the interest rates in the month of December by 25 basis points, and in the upcoming meet of the January end. So we estimate that the Federal Reserve is going to continue the rate cut cycle, and they are going to cut the rate by 25 basis points, which is highly likely. So this is being done. So Federal Reserve is taking an accommodative stance so as to support the liquidity conditions in the market. But the main concern persists in the demand side, and inflation is no longer a concern. So, so that is why the Federal Reserve is trying to take an accommodative stance. They are going to cut the rates, so which is going to improve the liquidity conditions. So key developments in India, again in India as well, the inflation is quite subdued. It is currently the consumer price index stands at 0.71 percentage points, and further we see that in India as well, the RBI is following the trails of Federal Reserve. So they are also cutting the interest rates, and currently the interest rates stand at 5 percentage points. And soon, I guess in February, we also have an upcoming RBI MPC meet where they are going to decide. They might, highly likely, they will cut the interest rates by again 25 basis points. Oil price also remains subdued, which is directly linked to the consumer sentiment, as the consumer sentiments are down, which is clearly reflected in the weak oil prices. So currently the oil prices are hovering around 57 US dollars per barrel. FII continues to be on the selling side, and it has been so since July 2025. And the momentum so far in January is also indicates that FIIs are going to be net sellers for the month of January. That is also a cause of concern. Weak NIR, so against the US dollar, so now it has crossed 90 rupees per dollar. So, which reflects clearly that FIIs are selling big and they are moving money out of the Indian market, of course. So, again, we have discussed. So, we also have a budget which is upcoming, which is due very soon. So, we will definitely see that government as central bank is from the monetary policy perspective, they are also taking an accommodative stance. They are trying to cut the interest rates and trying to improve the liquidity conditions. So the government from the policy, fiscal policy perspective, they will also try to take an accommodative stance by cutting the persisting tax regime. They are going to ease somewhat and give some ease to the common public and also to the businesses in terms of tax cuts. That is highly likely. And apart from that, they are going to increase, they might allocate more money towards government spending so as to boost the overall demand in the India in to boost the demand all over the country. So highly likely, as a part of fiscal policy, government will definitely try to take an accommodative stance. So let's move forward from here. So yes, so global markets, global indices are at all-time high, and most of the emerging markets are also at all-time high. So that is definitely not a very good sign. On one side, we have inflation, which is quite subdued, and economies are overheating, and markets are at the peak. So markets are completely seem to be devoid of the fundamentals. They have derailed from the fundamentals and they look very overvalued at this point in time. So, global FDI momentum has also declined as per the World Investment Report by UN, so which clearly shows that FDIs are not flowing into the emerging markets, and the foreign investors continue to look away from the emerging markets, and that pressure we clearly see in the INR value against the US dollar. So, INR continues to fall against the USD, and global demand seems to be quite in a weak spot, very well reflected in oil prices as well. So GDP forecasts also tend to be lower for the upcoming year. Now let's talk of the key benchmark for the Nifty 50. So these points are for January, and these are latest they were taken by me on 10th of January. So currently it stands at 25,683 points, and these are the respective EMA or moving average levels that you can see in front of your screen. Sectoral view, we have seen currently underperformers are IT, Nifty IT, Nifty Reality, FMCG, consumer durables. They are currently the underperformer in from the Nifty sector perspective. Outperformers remain mainly the PSU banks, financial services, and auto sector. They remain the outperformers at the moment. We see a consolidation in pharma and healthcare sector, and there can be a likely turnaround for oil and gas. So, the reason being the oil prices remain subdued, which may help in increasing the margins for the oil refining companies. So definitely it might result in a good margins for oil refineries of India. So refining companies of India. So definitely it give a potential turnaround for oil and gas sector. But that is still we are yet to see whether turn around happens or not. But there are likely chances for a turnaround in oil and gas sector. Moving on, so market range will mostly be around plus minus 1.46 percentage points. So we can see market dipping around this range for the upcoming week from 12th of January to 16th of January. as per the current Nifty 50 levels that I have taken on 10th of January, that was yesterday, Saturday. PCR ratio tends to be less than 1 for the entire expiries of January, which clearly indicates that there are more of option writing has happened more on the call side, which again indicates that Nifty 50 might be in bearish zone for the entire month of January. So now moving on to the technical chart, price chart of Nifty 50. I have taken a weekly price chart on January 10th. So this is how the um, price chart looks. So Nifty made a peak in September 2024 of 26,000, and then it was continuously falling. And then from April 2025 onwards, it has been rising since then, but mostly we can see it has not broken a decisive, it has not given a decisive breakout of the last high of 2024 September. So it was at 26,000 level. So it has not given any decisive breakout from that level. And we can see that recently Nifty has, in reverse, Nifty has given a red candle. So that is a quite a decisive candle on the opposite direction. So which still means that markets are not in a very growth stage. So Nifty has failed to successfully break its previous high of 2024. And combining this data with our fundamental view, we see that there are very less chances that market is going to grow for the year of 2026, and there are high chances that market may go into correction mode. If not the correction mode, if it will definitely consolidate in the 2026 year. In the year 2026, it's going to consolidate, and it will not be a good year for the Indian equities. So, if not the outright crash, Nifty will definitely be in a sideways zone. So, rating the different investment vehicles, investment instruments that are available. So, we are not uh, bullish on equities, bonds, and cryptos. So, I have assigned them an underweight rating. So, underweight rating indicates that indication of decreasing exposure to respective investment vehicle. So, we are not assigning a bullish view on underweight category. So cryptos, equities and bonds, as per my analysis, will continue to be in the underweight category for the year of 2026. On the other hand, I see that gold and silver will further will continue to shine further. Uh, Only gold and silver in the commodities section. And if somebody is looking for investments, then fixed income securities will definitely give a better return than the equities. So, giving the closing comments, I will definitely say that it's not a time of aggressive trading or investment in the equity markets. So, fixed income securities will be a safe harbor for any investment decisions. Gold and silver will continue to shine, and muted growths will be there in the equities section for 2026 as per the fundamental research. So that's all from my end. So if there are any questions, you can put up in the comment section. If you like me to share this report with you on a weekly basis, you can reach out to me over email, and you can also drop me a WhatsApp message, or you can drop me a comments if you are liking my video. If you really like my video, please subscribe to my channel and continue to follow my channel. And on the weekly basis, we'll come out with the market pulse report, which will give you an updated view of economic scenarios across the globe plus India, and we will also share the view of market trends related to India, mainly around Nifties. Thank you. Thank you for patiently listening to me and watching my channel. And please subscribe and follow my channel. Thank you.